Hey guys, Jay here. This is smarthelping.com, advanced version of the Laundromat financial model. So we'll go through all the updates. First thing to note, none of the machine configuration is different. So the revenue and expense, cap table, capex, um, those are pretty much the same. There's still all the financial statements, um, just kind of cash flow analysis. All this stuff is still the same. Here's the updates though. So there's a lot of toggles and there's a lot of options. So now you can toggle if you're going to rent the building you're purchasing to get the laundromat going, or if you're just acquiring it. If renting, this running cost will automatically populate based on the assumptions here for total square feet, monthly rent per square foot, and annual increase. If you hit no here, then this automatically goes to zero for the rent cost row. Also, the CapEx cost basis for building here will zero out if you hit yes here for renting. You can see now CapEx, now the cost, no building. So there's some automated toggling there. There's a sale leaseback option. So that means if you're not renting the building, what you're going to do is sale leaseback, and maybe you buy the building, do some improvements, sell it back to somebody else or someone at a higher price and pay them rent. You can do that by saying, yes, we want to sale leaseback. If you select sale leaseback, there's assumptions here for the multiple on your initial cost basis that you're going to sell it for, and then what rent you're going to pay and the resulting cash flows here. And that will also affect the income statement. You can see here some things happening, and on the balance sheet, the building goes away after you sell it, and all of those effects happening. So pretty advanced stuff here. You got to know what you're doing, know what these terms are, but the model's built so you can just toggle these things on and off and enter the assumptions, and all of the financial forecasting and cash flow analysis and all that will update. And there's quite a bit of logic to understand how these work. Third thing, you can do bonus depreciation on or off, and also set the building recovery period if no bonus. So let's say we set this on. If we go to our CapEx tab, you can see all of the equipment is 1 month. And so all of that depreciation is happening immediately in the first year or whenever the purchase happens. If you select off here, now it goes to whatever you've put on the machine configuration for the useful life here. So 7 years. So now the depreciation per month is a lot less. You can see on the income statement now this is happening over time. You still have the building being depreciated um, on a straight line until if you do it in a sale leaseback. If we hit no on the sale leaseback, you can see now the depreciation for the building is just going straight line based on the entry here for useful life. Um, this this is not relevant anymore because we updated it, so it's a hard code entry here for the building useful life. So you could change that to whatever year amount. And then you've got other, you can also do building improvements. You've got your equipment here. Building improvements can be, or other CapEx can be defined here the month it happens. Um, count, cost per unit, total purchase, whatever. There's a lot of configurations here if you're doing cost segregation, the resulting useful life. So anyway, there's separate areas for uh, building improvements, washer and dryer purchases, and then the actual building itself here. And you enter the cost basis and sale basis. If you are purchasing the building, not doing a sale lease back and just holding it till the exit, you can, then enter these assumptions. Okay, so that's all of that. What else do we want to do? You see the balance sheet balances all the way through. Oh yeah, there's 3 loan types now. So you can do a construction PIK loan, and you can turn the PIK on or off. So what that means is you're going to take out a loan. It could be for construction or whatever. It's got a loan term, interest rate, payments per year. It's got a first payment date. That's going to trigger when the proceeds come in and when the payments start. You've also got this interest only period, and if the PIK is on or off. Now, if the PIK is on, you can see here we've got 6 payments of interest. And with PIK means payment in kind. It just means the interest is going to accrue and compound on the balance, and then whenever the interest only period is done, is basically a refi into a P&I loan, which you then start paying. So the actual cash flow for the payments, principal and interest are an L&M. So if I turn this PIK off, you can see, okay, now it's just a regular P&I loan based on these terms. If I turn it on, PIK, here's the PIK, the interest only rate, which is different than the amortization whenever the refi happens. This was very hard to code in, so it worked flawlessly with all of the different financial statements and everything. You can see that PIK loan here happening in March, and there's a balance going up with the interest accrual, and then it starts going down when you start making payments. There's a lot of formulas and accounting knowledge needed to make this work right, but it does. It's been vetted. Very effective at being able to plan out a construction loan if you're going to have some time where you need to build out the actual your actual property for the laundromat. Okay, then there's a mortgage. So this is obviously just based on the building purchase price, which is just this amount here, whatever that is. If you are doing, if this is no, then that will populate based on there being a value here. Now, if this were yes, again, we're renting, then you can see the mortgage just zeroes out. So there's a lot of nice automated stuff here as well. So we'll put that back to no. Okay, we're going to have a mortgage. That's what we're paying on the mortgage. Now, interestingly, what if you do that and then you do the sale lease back in let's say we do the sale lease back in June. Well, now look at the mortgage. Boom, look at that. We do that, we pay on it a bit, then we do the sale lease back and this zeroes out. And the mortgage amount is just based on a percentage of building costs financed. Finally, there is an equipment loan. So this is separate, hard-coded entry. You can just look at your equipment and see how much you want to, if you want to finance some of it, you can just manually input the amount, the first month that happens, interest rate, and loan term, and that's just a regular amortization schedule. Again, all loans and everything, if let's say, we exit, this is only a couple year forecast, this will be paid back if you include the terminal value here as yes. Now, if you put no, then this will just flow into perpetuity, and the balance sheet will just flow to the end like this. And all of this code's right. The balance sheet updates. It always balances. All this stuff is all automated. All the formulas. So I think this is definitely an advanced version of a financial model, and not much of the operating activities or any really have changed. It's still the nice, you got the revenues, the scenario analysis, your capacity, how many machines you're buying, all of that stuff, your running costs is all the same, which you can see happens over here on the monthly detail. Like this is how you're actually making money. But what we've done on this advanced version is update how you can finance and a lot of specifics around building, sale leaseback option and bonus depreciation. So a little bit heavier into the advanced financing area. So on this template, since it has all the extra stuff, it will be a higher price. And so if we go over to the site here, we go to industry specific. Let me find the Laundromat model right now. I think it's under services. Okay, so right now the base version is 45, and the base version does not have the advanced, it only has one loan type, and then it has no advanced toggles for lease back or renting or not, or all of that stuff. So 45. Now the advanced version I will post here immediately after the video. I'll get that all set up, and I think I'll charge $99 for it. $99. It will also be included in the general industry specific bundle for $299, and it will be included in the all models bundle that's $9.99 as well. So it'll be in both of those. It's just an advanced version. So let me get that up and listed. Very cool. I'm happy with this. I think I would put, if I had the choice, I would put this on all the brick and mortar financial models I had. But there's a lot. Let me see here. I've got, you know, what, 20, 30, about 30, 35. It might take me half a year to update all of these. If you do want these updates, I can completely do it for your personal situation at my regular billing rate, and I can go in here and start adding some of this logic in for you. It might take maybe 2 to 4 hours, maybe 5 hours, depends to do it. Um, but if there is a lot of demand for more, I'll try to start updating these. It's just a lot to do, and I don't know how much people are going to want to have those options or not. Um, so we'll just see, because I have to balance out my time, what I'm charging for the templates, what makes sense. There's just a lot of stuff because I'm just a one-man operation. Alrighty. Well, that's all I got for you on this one. Hope you guys have a great day. Like and subscribe to the video, and check out more templates. I'll see you guys.